Hi everyone, happy Thursday. Coming to you live from the East Bay of California, Oakland, California. And today's topic is a business topic. I wanted to talk with you about a method I learned and use a variation of called Profit First. It's this whole idea of getting your cash flow straight. I first encountered this problem when I first started the business, actually, because it was like we looked profitable on paper, but we had no cash. And part of the reason why is I had to pay the freedom makers, and then the clients, I had to wait for the clients to pay me. So I always felt broke. And even though we were profitable on paper. And I see another thing, and it's talked about in the book, where when your sales increase, then your expenses follow, because you've gotten more sales, so then you have to spend more to offer the services or products that you sell in order to send the customer what they purchased. And then what happens is with that comes an increase in fixed expenses. So maybe if you're selling widgets and you get this large increase in sales, so then you end up having to move into a bigger warehouse. And so now you've got this fixed expense of your warehouse. And then eventually your sales will drop, because they always do. Something happens, you lose a big client, or it's seasonal, or there's a major product issue, and so then you just, you lose a bunch of clients, or you don't get new clients coming in, a new competitor comes in play, and you aren't getting as many new clients. So then your sales drop. And then the problem, though, is that it takes a while for your expenses to drop as well, because you've got those fixed expenses like a bigger warehouse or subscriptions to all these new software that you no longer need because your sales have dropped, but you've paid for them for a year or two. So now you've got this lag where you've got still high expenses but lower sales, and so you're in a cash flow crunch, right? So how do you deal with cash flow? And I came across this book a couple years ago called Profit First, and I love it because it's all about cash flow in a way to match human behavior. So what he starts off with, and I remember I read an article in LinkedIn, and I was like, this is the dumbest thing ever. Because his whole premise is, accounting principles is the basic business principle, right? Is sales minus expenses equals profit. And he's like, let's flip that around, and let's say sales minus profit equals expenses. And that's where I was like, that's the dumbest thing ever, because it's the same math. But when you read the book, it's not about the math, it's about human behavior. And so he's saying, put aside money for profit so that whatever you have left over is what you spend, and you can only spend that much. An example, so say you get a major check from a client, it's like $10,000. You put it into one bank account, and you're like, oh, now finally I've got $10,000. Let me catch up on that bill, and that bill, and that bill, and that bill. And now suddenly you don't have any of that $10,000 left, because it all came from that one pot. And so he's basically saying, if you set aside the money for your profit, for your taxes, for paying yourself, and then what you have left over is what you use to pay the bills, then you're going to save money for the other things, right? So in my mind, it kind of sounds like your 401k, right? So by if you're a corporate employee, you have your 401k contribution deducted from your paycheck. So yes, you get the tax deduction for that, or the reduced tax amount for that. But also, you don't even really notice that money is gone. You don't notice that it's not coming into your bank account, but that it's going instead into your 401k or your IRA. So basically, you put that money aside and you didn't even notice that you did, because you did it up front. And so that's kind of the same thing what the author is saying, Mike is saying, is that you take that money aside up front, and then you don't spend it as a result, right? And so so that sales minus profit equals expenses, right? So it's almost like your paycheck minus your 401k equals your take-home pay. It's kind of that same premise, where if you take it out ahead of time, you don't even notice that you didn't get it. And so, and to give another example, is he equates it similar to dieting. And he said, the book is actually really funny. And he talks about how he came up with these ideas and what happened that led him to be inspired by these ideas. But basically, not a fad diet, but like a true dietitian on what's the best way to lose or maintain weight. There are 4 principles. And he equates those 4 principles to managing your cash flow in your business as well. And so the first is use small plates. Right? It's proven that if you eat on a smaller plate, you actually eat less. And it was something like the average plate size in America has increased by 23% over the last 30 years or something like that. And so it's just crazy how much more we eat because we have bigger plates, because we're taught you have to clear your plate. So one of the suggestions from dietitians is use smaller plates. And he's saying the same thing. Use smaller plates by having multiple bank accounts. So you have a bank account for your taxes. You have a bank account for your profit. You have a bank account for payroll. And then you have a bank account for your operating expenses. So by literally moving that money to a different bank account, you have less money to spend, right? So let's say you get that check for $10,000 from a client. You're going to move 500 of it into your profit account. And then you're going to move 1,000 of it into your tax account. And then you're going to move 5,000 of it into your owner pay. So then you've got 6,500. So then you have 3,500 that goes into your operating expense account. And that is the money that you would use to pay your bills for your business. So now, and if you don't have it, if 3,500 is not enough, then instead of pulling from the other accounts, you got to lower your expenses. So it's a way for you to stay in check with your business and also have cash flow as a result. So then the second thing is serve sequentially. So dietitians say, eat your vegetables first, because if you save them for last, by the time you get to the end of the meal, you're like, yeah, I don't really want my vegetables, and therefore you're less likely to eat them. So, you eat your vegetables first and you save the fruit or whatever or the potato, French fries and things like that for last. That way you're full on the healthier stuff, which means you'll eat less of the less healthy stuff. So he says the same thing, like put money in your profit account first, then your owner pay, then your tax account, and then whatever's left over goes into your operating expense account. And the third one is remove temptation. And so, how many of you, if you have chocolate in your cupboards, you're going to eat it? I'm that way. Like, I am not someone who can have a box of candy or junk food in the house. It will be gone in a day. And so whenever I want something like that, I go get it for that one time. And so he's saying the same thing, remove temptation by moving your profit account and your tax account to a separate bank entirely, and not have online access, not have a debit card for it, things like that, so that you can't tap into it when you're feeling short on money. I don't personally do that because I'm pretty good about ignoring those accounts and not even noticing that they're there. But that's not my temptation, right? I have other temptations. But if that's your temptation, then that's something you could do, is move it to a separate bank account where you cannot access the accounts online. You cannot use a debit card or anything like that. And then the fourth thing is enforce a rhythm. So same thing with eating. When you have this rhythm about when you eat and how much to eat, it becomes much easier. Same thing with your cash flow. He says pay your bills on the 10th and 25th of every month, because most bills are due on the 15th and the 1st. So if you pay your bills on the 10th and 25th, you get in this habit of paying them. And therefore, it's not like as money comes in, it goes out. You're able to sort of have a smooth out process for sending cash out. And I like that too from a systems perspective, all right, from a time management perspective. Like, the more efficient you are, the more you get done. And efficiency, a big component of efficiency is called batching, where you do a cluster of activities at a time so that you're not doing it piecemeal throughout the day or throughout the week. So that's an example of batching, where you're going to batch all your bills into one sit-down session to pay them. And so you do that on the 10th and 25th of every month. I did that yesterday, and I do it every 10th and 25th. And yes, I did do it on Christmas Day. So that's kind of the basic gist of it. I love it. I'm a huge fan. I tell everyone about it. I have, of course, my own variation in that even with having an operating expense account, somehow I would manage to spend everything in that operating expense account. So I ended up creating a separate account for marketing and for what I call annual payments. So a lot of the memberships or like software subscriptions where they renew every year, I keep money in that account to handle those types of bills where I'm not constantly like, oh, how am I going to pay that? Because the money just stays there, kind of thing. And he kind of gives an example of that in the more advanced section of the book, which is, he gave an example of a hardware store where whenever the business owner sells a stack of wood or something, the carpenter gets something like 250 nails included for free. But the store owner has to buy him like 5,000 at a time. And that, a huge batch at a time, and that's like $10,000, or I can't remember how much it costs. And so what he does, so he ends up, it takes him like 6 months to get through a batch. So he has to place this order twice a year. So what he does is every month he puts a portion aside into an account so that when it comes time to order a new batch of nails, he has that $5,000 saved up already. So I kind of do the same thing, but I'm doing it for annual subscriptions. And so that's how I do it. So in order for me to not spend everything in my operating expense account, I have a separate account for marketing and for annual payments and also for payroll. But you should have one. If you have payroll, you should have a separate account for payroll anyway. So that's basically it. Your bookkeeper or accountant might give you a hard time about it. But if you love it, stick with it and they can deal with it. Because, to a bookkeeper who doesn't understand this model, they're like, I don't understand. How's that any different from the general ledger? You can do all that in the general ledger. And my response to that is, first of all, I don't know what a general ledger is. But second of all, it's not about tracking the money, which is what accounting does. The accounting principles that are prevalent today around the world, the GAAP, generally accepted accounting principles or procedures, that's accepted around the world for the most part. But it's not about tracking the money. It's about matching human behavior to cash. And we know that we all spend the money that we have, right? We expand to fill the space, basically. And it's the same thing. Like if we have $100, we're going to spend $100. If we have $1,000, we're going to spend $1,000. And so if you keep your operating expense as a separate and smaller plate, you're going to spend less if you're disciplined about it. And just think about that example. Like when you set aside money for your 401k, you actually don't notice that money. But if you said, all right, I'm going to take my whole paycheck and whatever's left over, I'm going to deposit in my 401k at the end of the month, you never deposit anything, right? You spend all of that money. It's the same concept. If you said, okay, whatever clients pay me, I'm going to spend for operating expenses, and then whatever's left over, I will set aside to pay myself. And then you never pay yourself because you're spending what's there. You're expanding to fill the space. So keep that in mind. Check out this book. It's funny. It's a quick read. But at the very least, just take these principles of set money aside that you're not going to look at in whatever manner that works for you so that you have a smaller plate, a smaller pot to spend money with, and therefore you stay within that smaller pot. So that's today's business topic. I hope it's helpful for you. If you want to know more details, feel free to reach out. And I hope your New Year's off to a great start, and we'll chat next week. Thanks. Bye.